Okay, I'm going to attempt a Q&A. I say attempt because I am not feeling well, and I got sick in Italy, came back early because I wasn't getting any better. Started to get better, but a couple of days ago it turned for the worst again, and now I'm well, having a hard time staying up. Anyways, I will attempt a Q&A here as best I can. I can't guarantee I'll get through the whole thing. Let's begin. I bet even the UK government doesn't think they've scored that many wins in these negotiations. And why do you think that? I used to follow these market updates religiously when Mark was less emotional about politics. Ever since Trump started being tough on Canada, commentary has become extremely one-sided. You got to be kidding me. You can't think of any other reason why I would be critical of your orange guy. I think you're the one displaying some emotion here. I think what's going on is I'm not saying things you already believe in. So you think, well, he's Canadian. That's why. It's because he's Canadian. And Trump said some things about Canada. He's biased now. It's so one-sided. You can't think of any other reason why I would be critical of your orange guy. Nothing comes to mind. Nothing at all. These are the kind of comments I really wanted to avoid here. You give your first sentence without any backup to it whatsoever. Just, oh no, I think UK did worse. Mark is so emotional. He's so biased. Who is this guy? A3. Well, I can't silence you. You are A3, but let's give you the role of novice. What an episode. Happy to hear you're better. I was. Turns out that I'm 25. Where would you look towards in getting to being an AI manager if you're my age? Well, I don't know about being an saying AI manager, but you better know how to use AI. You better know how to use those tools. I've been using them for the last couple of days. Yesterday I wanted to generate a course outline for a university course. These things are normally 40, 50 pages long. And if you are proposing a new course, you have to write out a proposal. You have to write out all what you're doing every week, what topics you're touching, why it's relevant to touch on those topics, why this course now at this time, what resources are needed. If there is no book, if the field of study is so new, you have to curate all the content yourself. And then you have to have all of your learning objectives by week written out. It's a big undertaking, 80 to 100 hours at least. I spent about an hour writing out a series of learning objectives and a rough outline. And then I gave it to Gemini 2.5 and asked it to complete it, generate a 10-week undergrad course. These are the learning objectives. This is the rough outline. And it generated a 42-page course outline ready to be handed in to the dean's office for approval and funding. I went through it and fixed a few things here and there, but in the end it was done. I might have put maybe 6 to 8 hours in the whole thing. Not 80 to 100 hours, but 6 to 8 hours. Usually if you're writing one of these, it's a couple of weeks of intense work because you have to lay out the whole thing. The increase in productivity is absolutely amazing what it can do. I no longer search since I have all the subscriptions now. I simply just go to the tool that I want to use, whichever, if I'm just searching the internet, if I'm just searching for some basic stuff, if I need some reasoning, you pick and choose your tools. And what you get out of it is incredible. The amount of time that I can save. I keep waiting for the Mark to drop the bomb at the end of the video telling us this week's market outlook was entirely generated by AI. That is the goal. Here is my forecast. And I didn't think about this in 2022. I sold my business in 2022, and you can't imagine what the world is going to be like in 2030. But I have a non-comp a non-competition clause. That's standard when you sell a business. You're not going to be able to take a pile of money and then walk across the street, set up shop, and compete. But here's what I didn't think about. By 2030, it will be possible, entirely possible, to take all of the videos I've ever done for CFA level 1, 2, and 3, give them as input to a model so that the model can fine-tune based on me, give it a reading from CFAI, and it will be able to produce a video in my style using my voice in the way that I do it without me being involved at all. Now, when I sold the business, I didn't think of selling my voice in perpetuity. But because I've sold the videos and a model could be trained on the videos and I sold all that, that is exactly what can happen now, is that if I did in 2030 say, you know what, I think I should do this again, it is very likely I would have to compete against a much faster version of me. Now, I can't put all those videos into an AI model because I no longer own them. The whole library I no longer own, so I no longer have all of that content I can use. How much was that worth? How much more valuable are the libraries of all the videos I've ever done? I want you to think about this for a minute. Let's say that CFAI, after 5 years, let's say we're over here, this is level 1. And let's say that after 5 years, 60% of level 1 is new. Well, previous to AI, you needed my voice if you wanted my videos, but you have all of my videos from 2018, 19, 20, 21, 22, and there's a belief that, each year about 10 to 15% of your library goes obsolete because that's the rate at which they change it. But now, all of this is input into a model to create me. And then you give it a new reading, and all of this, everything it knows about me, my style, the way I talk, the way I do things, the sound of my voice, it then takes this and produces a new video that basically comes as close to me as possible. All of this old content that was obsolete now has value. How much is that worth? Because now I'm a voice in perpetuity. Think about that for a minute. How much is that worth? All of that now suddenly has value, as opposed to being obsolete each and every year. Isn't that incredible? So, to drop the bomb, the market outlook was generated by AI. I guarantee you it will be. Right now, not really. It's expensive to generate video. The output tokens required for that, it would be really expensive to generate. So it's still cheaper for me to do the market outlook on my own than to pay for AI. But that will change. That will change over time. You can simply give it the past 100 market outlooks and say, this is what I need, the basic screens you need. And then I need a couple of stories every week that are interesting and educational. And it could, in my voice, in time, produce that. I don't think that I'm irreplaceable here, which sort of makes me excited and sad at the same time, because I do see by 2030 there'll probably be very little room left for my skill set. Objective point of view, do you not think those results, such as lowering tariffs on the first 100K imported cars, is a win for the UK? And it is, right? You got to think there are 25% tariffs on vehicles going into the US. So let's just take a UK model. We'll say here's a UK model. And we'll say here is a model, another model in the US that had to face the 25% tariff. Pre-tariff, let's say that the delta between the two cars was $5,000. Not 50,000. Let's say the delta was $5,000. That the UK model felt that if it priced at $5,000 more than this model, it would do okay. Now, if every other model going into the US is facing these 25% tariffs, and the UK wants to maintain the delta at 5,000, it can raise its prices as if it had a 25% tariff, but it only has a 10% tariff. To the extent that the UK is the only one who's going to face that 10% tariff on the first 100,000, while every other importer is going to face 25%. If they want to maintain their delta, they can extract extra profitability on those first 100,000. That is a win. I mean, if everyone was going to be punished, but you're going to be punished less, that is a win. Even though you're going to be punished, it's still a win if you're going to be punished less. Let's see. I know I've suggested this before, but with your demonstration of AI in this week's Market Outlook, I have an idea. If I look at a PDF of the videos, sometimes I can't recall what was said. Or if I haven't watched the video and I want to read the PDF first, I may understand what's on the slide, but there may be one concept I don't get. So instead of going back to the video, I think having the transcript attached to the PDF would be amazing. But isn't the PDF the transcript? I see what you're doing. Without reading it, I can see where you're going. You can do that. You don't need me. You don't need me. All you have to do is you give a link to Gemini or chat of the video, and you request a transcript of the video broken down by minute. If you want timestamps broken down by every 5 minutes or 3 minutes, you can ask for that. You can then ask for a too long didn't view, and it'll give you a summary. And as you're reading through it, if you get to a point where you say, okay, well, I don't understand this, if you're watching it, you can go to the transcript at that minute, and you can take that text and you can ask Gemini or chat, could you please explain this? And in quotes, put my statement down, and you say, please explain it like I was a first-year university student or like I'm a high school student, and it'll explain it. You don't need me to produce that output for you. Just start using the tool yourself, and you can get out of it whatever it is you want. Let's see. Okay. Trying to come up with a plan for the AI wave that's rising and taking over. Personally, I took an approach to code and build a personal platform to adopt and design trading strategies, basically Python and Y Finance. I hope to in the near future employ myself and work full-time to reach an income from trading my own money. My actual job is not finance related. I don't see much future in it because of automation. So far I managed all my spending income and positions, plus some of the standard watch lists, technical analysis, and more advanced things like fast graphs, Black Litterman portfolio analysis. Do you see an edge doing this? I don't know enough about what you're doing. I mean, I can't see it to really give an opinion on this. Are there any other tools you would consider useful to create natively? There are already a lot of GPTs. These are generative pre-trained transformers. In the finance space, there's FinGPT. Bloomberg has one trained on all its data. InvestLM, that one's out there. If you have Gemini or Chat, these are the two that I'm using, and you say, give me a list or compile a list of fine-tuned LLMs for the finance domain. That's what it's called. A lot of these are built on existing LLMs. So the LLM will be a general LLM, and then you can use something like Vertex AI to then train it specifically on a specific domain, and then you end up with a specialized, a fine-tuned AI. So there's already a whole bunch for finance already. A lot of them do sentiment analysis. That's their big thing because, well, you're analyzing text, right? So a lot of them do sentiment analysis, but there's already a whole bunch out there. And the thing about this field is it won't stop. You don't really have to create your own. You just have to be aware of what other companies are creating and what happens to be out there. AI takes out 90% of cognitive work in 2 or 3 years. I don't know about 90%, but it is going to take out a chunk. Physical work holds steady due to underperformers being cut. But now the cut cognitive workers are more efficient and thus replace the underperformers in physical work. America likely does fine, but now unemployment spikes to 6 to 8%. Consumerism goes down, causing stocks to get repriced. So how I think this is going to play out is that I don't think national income will drop. I think it just becomes more concentrated, and I think that 4% unemployment will be a fond memory of better times. That I think 10 to 15% unemployment is probably the first level you'll get to without any decrease in GDP or national income. So I think what managers will probably do in their distribution, and will break it down top 20%, bottom 20%. I think this is the first wave that you'll see, is that the top 20% will be rewarded with more money because they will become way more productive. This is where productivity will show up first, is in, because they're already the most productive. They're already the best. And in every organization, usually the top 20% of workers do most of the work. And the bottom 20% really don't contribute very much. So I see their incomes rising significantly, and you don't need anybody here. So if you have a growing organization, you can keep headcount constant. While you grow, your productivity per employee will increase. And the manager will be counting their bonus because their division will become more and more profitable. If you have an organization or a department that's growing at a low rate or not at all, then this 20% becomes a target, especially if you can get this 20% more productive by using AI tools, whether it be fine-tuned tools that you have developed in-house based on company data, or whether it be more generalized reasoning tools or LLMs, whether it be in coding, whether it be in much more difficult reasoning tasks, whether it be in marketing, whether it be in strategy, whatever the case. The amount of tools out there are absolutely incredible. When you start looking, it's like, wow. So I think the first stop is increasing GDP, which means increasing national incomes, but those national incomes will continually flow upwards. So the income gap, I think, will widen, which will, of course, widen wealth inequality. But the question about the wealth inequality is it fair inequality? It will be fair inequality, but it will be inequality nonetheless. And here, these people are going to have to make a decision about what they want to do. And chances are, if they're performing at the bottom of their hierarchy, they probably would have been better off at a trade school. And maybe they went to university on the belief that, well, that's what everybody does, and if you can get into university, you should go. But not everybody should go. Universities, when 45% of high school graduates go on a university, that is way too much. The carrying capacity really is about 10 to 15%. If you are thinking about the distribution of ability. So we're underinvesting, or graduates these days are underinvesting their time in trades and overinvesting in cognitive fields that are going to disappear. So it may force people into the trades, and by 2030, the U.S. is going to be short hundreds of thousands of electricians. I know my electrician has a place here and a place in Florida. So he's doing pretty good. I know the bill that I get is ridiculous. Every time I get something done, I can see the rate per hour. It is incredible. So they might be better off there. I would say a first-year apprentice electrician probably makes more than a sociology graduate with a master's degree in their first year. And probably for their whole life. The electrician probably makes more easily. All right. Consumerism goes down. I don't know that consumerism goes down. I think the marginal propensity to consume will go down. I'm not sure that consumerism will go down in the near term, causing stocks to get repriced. And I think when we think about AI, there are four different recipients to the distribution of income. There are those that make the AI tools, number one. there are the companies that then use AI in their operations. There are the employees of the company, and then there are consumers. Here and here, I think we can say there are clear winners. The company, I think, will be a clear winner in terms of increasing its margin and becoming more efficient. Employees, some will win, and they'll win well. The bottom 20 to 30%, I think, are going to disappear over time. If AI tools are widely available as a general purpose technology, all companies can use them. Even new entrants will have that advantage. So I think that prices come down for consumers, because I think that, like all technology, this is going to be massively deflationary. So consumer is going to win over here. I don't know if these guys win. These companies that are making these tools right now, I don't know if they can generate the revenue that's necessary to overcome the annual depreciation in the capex that they have to put out just to continue to scale these things. There's going to be a big shakeout in the industry at some point. I don't know when profitability arrives at this industry. So I don't know that I would be betting on the AI producers to be the big winners here. I think the companies will be big winners, and I think consumers will be big winners. Employees, highly productive employees, are going to do fantastic. Now, if you fast forward maybe 15 years, I do see the potential of an interesting society where instead of having 62% of the working age population working, that's called the participation rate, you might drop down to like 50% or even 45%. And that means that you can have a family unit that's much more cohesive, because you can have a stay-at-home parent, because the one that is still working would be paid much more than they are being paid now, because they'd be much more productive in the use of the tools that they're using, so that their incomes can increase to maybe offset those that would disappear. So I think participation rates will probably decrease into the future. I think unemployment rates may increase for a while, but then I think I don't see 20% or 25% unemployment, because that would suggest that there are that many people still in the labor force. I think the labor force shrinks over time because the possibility of not having to work becomes very real. One income may be enough to get it done, because your income will be higher, but again, the deflationary impact of all of this will make access to services and products, I think, much cheaper. So there'll be a disruption period first. And again, even in the long term, I have a big question mark on whether or not all the money being spent right now, because this stuff depreciates rapidly, right? You spend $100 billion this year. In 4 years, you're spending it again, maybe 50 billion. In 4 years, maybe you're spending 25 billion, as costs of things come down. But I don't see how anybody spending 100 billion today is going to generate 25 billion a year for the next 4 years to cover that capex. Big question mark there. Let's see. Some over-leveraged crook likely busts, or crime becomes so bad businesses move out. My point is an obvious spillover effect. Any central bank, whether it's America, Euro, Russia, Brazil, China, prints money here in order to stimulate, but you cannot stimulate due to technology, just sending nearly all labor, 90%. How can you compete at zero? So we'll configure they'll print money. We can configure they'll print money due to them being a central bank, and likelihood of pressure to step in. The money is handed out via UBI. Well, central banks aren't in control of that. That's policy. That would be policy, and productive workers will be bid up in the marketplace, because not everybody's a productive worker. So if I'm very good at what I do and I'm very good at AI, I can increase my output by a factor of 5 or 6. Do you want me to stay with you, or do you want me to go to the competition? If I can increase my output by a factor of 5 or 6 and you pay me double, what I'm making now, you're still walking away with a nice margin. And if you don't want to, somebody else will pay me double if I can increase their output by a factor of 5 or 6. So the most productive employees, their incomes will be bid up significantly, and the least productive employees will be gone. They won't be needed. But society is adaptive. It is a complex system, but it is an adaptive complex system, and humans are strategic and adaptive. That if that is the environment that we're heading into, we will adapt. So I'm not too concerned about the destruction of society, but I would say that this is a general purpose technology that has the very real potential to restructure society. Is this not extremely bullish risk on investments such as Bitcoin? Why does it come to Bitcoin? Why? You're asking me, tell me why, as now it confirms that no matter how unlevel the table of the economy is, no matter what amount of money, high interest rates or low ones, will fix unemployment. I understand you make the argument new jobs for technology will appear, but you can replace experts and they cost nothing. The only road central uses is print more money. Why not buy Bitcoin? Why? Well, I mean, why? Why buy Bitcoin? Why? No one has, everyone keeps saying you should buy Bitcoin. Why buy Bitcoin? Give me the mechanism by which this becomes a thing. 15 years later, it's not a thing. Other than for hobbyists and collectors, it's not a thing. It is not even an asset. It's a collectible. Why do I want it? What is going on that I want Bitcoin? No one has ever been able to answer that. Other than, oh, inflation. So what? So what about inflation? Bitcoin has asset price inflation, so there you go. I mean, give me a reason why I want this imaginary thing of zeros and ones. I can't use it anywhere. My bank doesn't accept it. The gas station doesn't accept it. Nobody else accepts it. Nobody anywhere accepts it. And if everyone did accept it, if this became the currency, you would be begging for fiat currency because there's no way to increase the money supply. And it's limited, so either you have it or you don't. There's no way to get it. You would be begging for fiat. So no, I don't think this leads to Bitcoin. I don't think any road leads to Bitcoin. But I think the Bitcoin road does lead eventually to ruin. But I don't think any road really leads to Bitcoin. That's just my opinion. But a technology that's been around for 15 years, still struggling to find a problem to solve, and that is full of contradiction, is not a technology. It's a cult, and that's all it is. What do you think about Trump's latest executive order imposing most favored nation on U.S. pharma companies? Don't know enough about it. I don't expect to reduce the price of drugs in the U.S. by anywhere near the amounts he's claiming. Well, nothing ever happens anywhere near the amounts he claims. I think we know that. Even when he claims that something has never happened before, it really has happened. Whenever he claims that no one's ever seen anything like that, everyone has seen many things like that many, many times, again and again. I don't know that there's anything he really does that is other than his openness to corruption. I don't think that we can say anything like no one's ever seen anything like this before. So no, it's not going to drop prices anywhere near what he claims. One could argue that it will be a drag on profits of U.S. pharmaceuticals. It could successfully be a net positive thing for American citizens at the cost of a massive net negative thing for non-Americans. I'm not following. I can't complete that thought for you. What? I mean, it's okay to make a statement like that, but then connect the dots for me, because when you make that, it's like you're expecting that I will now make the connection. I'm not making the connection of it could be net positive but net negative for non-Americans. I'm not following that. This is going to hurt Canada a lot, isn't it? Again, don't ask me. Tell me, why do you think it's going to hurt Canada? I'm not making that connection either. If your argument is that drug companies are not really going to charge Americans less, they're just going to start charging everybody more, I don't see that. I don't see that at all, because they always could have, and I'm sure they absolutely have always wanted to. Absolutely have always wanted to, but they don't. They can't. Otherwise, they would have. Right? So if you look at where the highest spending per capita is in drugs, it is by far the U.S. The highest capita of spending on drugs. But if you look at the highest incidence of certain types of common diseases, it's the U.S. The U.S., I think, has a bigger problem. It spends so much more money on healthcare than almost any other country and generates worse outcomes. So do you blame that on the pharmaceutical system, or do you blame that on the healthcare system as a whole? I don't think it's just the drugs. Somebody has to prescribe the drugs for the drugs to be sold. And I do think that in the U.S. there is an over-reliance on prescribing drugs, and maybe that's because throughout the whole system the doctors get a kickback whenever they prescribe drugs. Well, then there's where you fix it. Not in demanding lower prices, but you fix it there. Instead of lower prices, why not lower quantities? Do people really need that many drugs? And if they do, if the population is that sick, then there's something fundamentally wrong in the system. So I think looking at, God, we buy a lot of drugs, don't we, is not really the problem. The problem is, why do we buy a lot of drugs? Not we buy a lot of drugs, we need them cheaper. It's why do we buy a lot of drugs? And, maybe deal with some of that. But no, I don't think it's going to hurt Canada, because if the pharmaceutical companies could have raised prices for drugs in Canada, they already would have. If they had the power to do it, they already would have. So I don't see that happening. Tariffs on cars dropped from 25 to 10%, and Mark calls it a win for the UK, but he doesn't mention that pre-Trump was only 2.5. Yes, I do. Go back to that video. I do mention that. So in fact, tariffs on cars have increased from 2.5 to 10. But they've increased from 2.5 to 27.5 for everybody else. Right? You're missing that point. I think we've already dealt with the finance ladder earlier. Got a green circle, so that's weighted as novice there. So I think we can pass on that. AI discussion, very interesting. Recent read that IBM has replaced significant portion of their HR staff with AI. With AI. HR. Good. Good. I think HR staff are probably really a big part of the problem in recruitment these days, and in recruiting for merit. I think HR is, if you're going to look for that woke mind virus, you're probably going to find it in HR departments more than any other place in an organization. If you need to be an expert to be considered for a job, what happens to new graduates? Well, if you've looked at the headlines both in the U.S. and Canada, this is, I think, one of the worst years for placement. The highest percentage of graduates without a job this year. Now, that it's hard to tear that apart. Is that because of the sheer amount of uncertainty in the economy, because of trade policy and immigration policy? But it's in both Canada and the U.S. Is it because organizations have begun to adopt the new LLMs and reasoning models and saying, you know what, much like I have done over the last little while, you know what, maybe we don't need to hire 3 interns or 3 new students this year, or 2 or 5 or whatever the case is. Maybe we don't need it. It is hard to tear apart. But yeah, I do see that as becoming a problem, especially when new graduates in their digital mastery don't have AI behind them. But if you're graduating in a field, let's say computer science, and you're up to date on the AI tools and you can use them, you are automatically a very productive worker. So I think in a lot of job interviews now, probably questions are going to center around what is your digital literacy when it comes to AI tools. Have you used any of the big ones? Any from OpenAI? Any from Gemini? Any from Llama? Any from Anthropic? Llama Meta, I should say. What other ones have you used? What tools can you bring right away? Much like 20 years ago, what computer skills do you have? Do you know how to use Office? Do you know how to do all of that stuff? I'm sure that's probably going on in interviews today. U.S.-China trade talks in Geneva is a binomial event where outcomes are either substantially lower tariffs or tariffs unchanged, and the market price on Sunday night is probably weighted linear combination of the index value conditional on the result of the talks. Yeah, probably. Therefore, good news from the talks will be bullish on the margin, and it was, leading to some price appreciation, and it did. However, that would lead to appreciating prices in excess of their value before Liberation Day, and they are. How does this square with the reality? The forward-looking trade conditions are in all scenarios worse than they were in late March. Stupidity. I say that lightly, but there is a bit of truth to it, is that the market, it seems, has a very short memory and probably suffers from an anchoring bias, is that, here was the price yesterday, we have good news, hence the price today should be higher, without thinking, but was the price yesterday higher because of the anticipation of it? How many times did the anticipation get priced in, and then the reality gets priced in yet again, and has continued to be priced in, even though we get warnings about from companies, layoffs from companies, Walmart announcing prices are going up. Now, if there's one company in the world more than any other company that has the ability to control costs, it's Walmart. That's what it's known for. And if it's telling people prices are going up, then companies who do not have Walmart's logistical ability, what do you think is going to happen there? So if that's going to happen, especially if rates stay at these levels, yields on the long end of the curve, all credit is priced on the long end of the curve. And still, we read about tourism to the U.S. being down significantly. How is that suddenly worth more than it was before all of this started? I can't put it in my mind of how it's worth more. But it is. So one of two things: the equity market is wrong, or the bond market is wrong. Either yields belong much lower, or equity prices belong much lower. But you can't have yields continually going up and the equity market continually going up, and tariffs being threatened on again, off again. They're still not gone. Keep in mind, you have early July 2nd, 3rd, 4th, the reciprocal tariffs. You got to revisit that all over again. If the market continues to go up, God forbid, hitting new highs, Trump will be emboldened and he'll say the market can handle more than 10%. We've given it 10% and I digested the 10%. It can handle more than 10%, and he will do it because it's going to make America great again. It's going to bring more manufacturing back to the U.S. It's going to raise revenue. Keep in mind, he still got that crazy idea of everybody under 200,000 doesn't pay any income tax because tariffs will do it all. It will embolden him to go higher. 10% is the minimum. They will be higher, right? I have my window open, so everyone's doing their lawn. They're looking over there and going, oh, he's doing a video. Let's go outside and do our lawn. I know it's all about me. You mentioned 0-day expiration manage your short SPY. Could you elaborate more on what you are doing? maybe adding a module dedicated to zero data expiration strategies. So what I have is I have a long and a short, right? I have short beta, but I also have long beta, and I am net long beta. So if we think about what my short position has and what my long position has, I am net long on beta, mostly through individual names. The mostly Canadian names, but I do have some U.S. names in here still. GM has been a nice little winner in there. Boston Properties I have. It has not been performing as well as I would like it to be, but it's a great one to do short strangles on because it's just not really moving that much. Excuse me. So because I'm short over here, I want to maintain that short position because it allows me to take longer positions I otherwise wouldn't take. But at the same time, I want to generate revenue off of this position. So let's just say let's say I'm short at, where are we, 590. Let's just pretend here. Let's say it's 590, and we'll just say 100 shares. If you look at the zero data expiration options and you think about a distribution, right, and a percentage of the distribution, there is a likely chance that it will stay within a 1% distribution. So if we use an at the money put and we go down to maybe 2 standard deviations out and we use a call, here would probably be using a let's say probably a 575 call, and we'll use a 590 at the money put. Now you can use 0 day to expiration. Sometimes I just use 2. 2 seems to be a little bit better. But the 575 call will be at least 15. There's my dyslexia showing up again. It will be at least $15 plus something. Usually for 1 day, you can usually get another 40 cents out of that. And then your at the monies are usually about $1.80. Anywhere $1.75 to $2. Call it $1.80. So you're pulling out 220 on this one. So you put in you sell a 575 call, you sell a 590 put, and you buy 100 shares because you're short this 100 shares at 590, right? So when you buy, you cover your position, and you have the 2 day spread. If it stays above 590, it gets called away from you at 575, but you picked up 220 on that one. Over 2 days, you picked up 220, which isn't bad, right? If it ends below 590 and above 575, it will be both put and called away from you. You pick up 220. Where it doesn't help you is if it drops below 575, but of course you have the distribution that you're working with on the basis that a drop that much over 2 days is a low probability event. And then you keep doing that. Sometimes you can get it done every day, sometimes every 2 days, but it requires a high level of IV. The higher the IV, the better it is. So I don't really care too much about the underlying move. I mean, you do, but over long periods of time, you don't really care. As long as I have some volatility. What I don't want is a trending market in one direction, but that's okay. If I get a trending market, my net long beta should work out. But I said at the beginning of the year, what I expect is volatility everywhere. And I think volatility in SPY continues. So that's all I'm doing. I could reverse it. I mean, I could have had long beta here and short beta here and done it on IWM. IWM probably is a better one to do it on, but it's that one is a tricky one to use the options on. It has good premium, but it tends more often than not to move by more than the 1%. So I want a well-behaved underlying, which is SPY. The short position gives me money, by the way. Money which earns a cash rate. What is the 3-month T-bill sitting at 4.34, even the 1 month sitting at 4.3. So the T-bill, you can put your short funds in a T-bill. IB will allow you to do that. So you're earning the return return on all that money. Plus picking up the premium each time, but it is an active strategy. It does require you to be very active, and to make sure that it's not your only position. I mean, if it's your only position, it's a dangerous game to play. But if it's not your only position, if it's part of a bigger beta strategy, which gives you the underlying, even though it's a short position, gives you the cash, it gives you the ability to use the implied volatility to generate extra income. That doesn't mean you always win, but you're more likely to win over longer periods of time than not. But it does require an active position, and I really only set it, and then I don't even look during the course of the day. Rarely do I just stare at my screen and see what's going on. The ones I did roll them over today. Let's just see. Let me scroll down here. I do have the 575s here. I did roll them over today. They expire. Sorry, I rolled them over 2 days ago. They expire tomorrow. So I sold twice as many puts as I had underlyings. So that was a pickup of $1.10 based on that, and I picked up almost $2 on the 575 calls when I sold them. So all in all, it's a pickup of $3 over 2 days. So you could say my average short price is up $3, and then I'll do it again next week, and I'll do it again next week. My average short is way above where I originally shorted. I don't have the total amount for you. Let me see my portfolio. I do have, if I can click on it here, there it is. Let's just lengthen these. SPY, where is it? IBITS, SPY, oh, there it is. So with, I think, almost 4,600 shares short, and I was short from 540 up. I am down on that position right now by 14,000 on 4,600. So that's really only, you're down really about $3.50. That's how much I've been able to pick up day by day. You can really pick up when the market pulls back. Even if it pulls back 3-4 points, you can get a really nice pickup, and that's usually the time that you want to do it. It has risk. Everything has risk. Nothing is risk-free. Everything has risk. But if you play the distribution right, if you don't get greedy and you play the distribution right, you can do quite well. So that's how I use them. Do you still have positions in ZQ? No. How many cuts do you personally think would happen this year? I did like to think that there were more cuts happening, but with Trump, screaming at Powell, he's not screaming so much anymore. But I mean, I think Trump ruined the first rate cut, which could have easily happened this last meeting. Now that we've seen CPI this week and PPI this week, we think they could have cut. They could have cut. Now you may think, well, prices are going up. But with tariffs, it's a one-time jump. Okay, here are the tariffs. The prices have to go up, but that doesn't mean they continually keep going up. It's not broad-based pressure on prices going up because of economic activity. It's a one-time adjustment of the price because of a tax, right? The tariff is a tax. It's just a one-time adjustment because of the tax. And that will show up once, and not very much, because it's only 10% on 3.2 trillion of imports, not the full 4 trillion of imports. And that's assuming that the imports, the level of imports, are not affected by the tariff. Maybe the level of imports are lower. I don't know. But PPI on the services side today was the more damaging thing. The Fed has permission to cut. They've got clear permission to cut. They're paying attention to tariffs, and they're not paying attention to AI. They're not paying attention to the fact that this is I think the highest graduating class graduating without a job at even some of the best schools are not paying attention to these early warning signs and only paying attention to one thing. I think it's short-sighted, and I think it's a mistake. But I'm not the one in that room. So based on what I'm seeing, I'm not seeing a group of people who are really interested in cutting. So I don't know if we're going to get anything more than 2 unless things really start to fall apart. 25,000 CAD ready to deposit and trade. I'd like to hear opinions. Where would anyone in the chat put that money? Stocks, options, Forex, looking for... stay away from Forex. No one has any skill with Forex. Forex is brutal. I would say put the money where you have an understanding of what you're doing, and if you don't have an understanding of what you're doing, buy a broad market index. Well, you have CAD. What is the ticker for the TSX? There's a TSX 60. There's a ticker, an ETF for this one. I think it doesn't move very much. Low volatility, moves between 32 and 36, but that's about a 10% range. If you don't know what you're doing, go with that first. Stick with that first. Someone in the YouTube comments gave super useful recommendation for YouTube channel. The guy in the video published 2 hours ago saying an article about 0 ships heading towards California is just wrong. Well, no one said 0 ships are heading towards California. No one said that at all. I didn't even say 0 ships are heading towards California. There are ships heading towards California because you have more trading partners than just China. But what the source document I used for that had said was that 0 ships were leaving China heading for the ports, not 0 ships heading for the ports. And the director of the Port of Seattle said there are currently no ships at port. Now that's coming right from the guy. What am I going to do? Say, oh, you're wrong. You're wrong. Somebody on YouTube says you're wrong. I mean, come on. Right? I didn't say 0 ships were heading towards California. I said 0 ships from China were headed towards California. 10% hasn't really impacted shipping from other countries. Regarding using AI for our occupations, how would you go about this given that your occupation prevents you from using it? I'm an auditor and I agree that I could be 10x more productive with AI, but I'm only allowed to use Copilot. Not allowed to upload or add any sensitive information the model could steal and use somewhere else. Well, then that's an organization. It'll be an organizational thing, as I would encourage your organization to get on board or be left behind, because others will get on board. It's an absolute win when the UK faces only 10% tariff compared to domestic producers like GM who have to pay 25% due to the parts cost. There we go. Having used AI nearly daily since GPT-3, I've noticed there haven't been much improvements to the actual model itself over the past 18 months. We're definitely hitting diminishing returns and signs of being commoditized despite the increase of capital investment. Unless there's a genuine breakthrough towards AGI, future differentiation will come from integration front. Have you used the there's the GPT, there's the 4 series now, and then there's the O series. So maybe give O3 a try. These are the reasoning models, right? These are the LLMs. These are the reasoning models. Maybe try the reasoning models. I think O1 is their biggest one, and then O3 has 3 different versions, like a light, a medium, and one that's just as good as the O1. If you have the $20 a month subscription, I think you get O3 and O3. I'll tell you exactly what you get because I have it here. You get the 4.0. You get the O3 and the O4 Mini, the O4 Mini High, which is it's low, medium, high on O3. O3 uses low, medium, high. O4 is a high. More models. There's a 4.5 that's in the 4.0 series, and there's a 4.0 Mini. 4.5 is a deep research model. I don't know if you used the O series yet. If you used any of the reasoning models. But the parameters on the 4 series are significantly more than on the 3. So it is, if you're using just the 4, maybe try going to the O series. L2 students still worth do the charters. There is doubt that AI is going to completely replace a charter holder in the future. I don't know that I would say replace a charter holder, but even among charter holders, there's low productivity charter holders and high productivity charter holders. There is a distribution of abilities among charter holders. CFA likes to say, oh, they're all the same, but they're not. They're not. I've met some charter holders that you wonder, you're just really good at passing tests, aren't you? You're not good at much else in the finance field, but you're good at passing tests, I think. Just because you pass 3 tests doesn't suddenly mean that you're at the top of your field. There are people who do not have a charter that are at the top of their field and are better and far more productive than many charter holders. So it's no guarantee that you're good. What it is a signal to the marketplace that you have learned a certain minimum amount of stuff. Well, somebody else may have learned that minimum amount of stuff. They just don't have a signaling device like 3 letters behind their name to let the world know that they know that, but they do. So I would say if you're a high productivity person to begin with, this will make you even better, right? But if you're one of those people who just like to get by, I just want to get by, I just want to do the job that's given to me, that you're not really trying to reach to higher levels, then I'd probably say maybe stopping sooner than later is a good strategy. Have friends who used to import used cars from US and selling them over 20K in Armenia. Now they're getting brand new electric cars from China and selling for the same price. More and more markets are opening up to China. This is true. I feel like nobody here is going to give you the financial advice you're looking for. We're all just people interested in global markets and finance and here to discuss opinions and read what others have to say. Some original message was deleted. I don't know whose original message. I did not ask about financial advice. Civic said opinion. Okay, I don't know what all this is, but okay. I'll let that go. Your question is way too hard to answer because most people don't know you and your personal search. Oh, this was about the 25, investing in 25. Well, that's probably the right answer, is to say, there is no answer for you. Yeah. Truly terrified of the possibility of being replaced by AI in finance based on current improvement rate of AI. Which areas or functions do you see are the limits that AI will not replace humans in finance over the next decade? Well, you're always going to need an expert. You're always going to need a human in the loop. If you are an expert and you are, let's say, in the top 20% in your field, this stuff will just make you even better. But I don't think it'll replace you. It'll just replace the need for you to have those other people at the bottom that, you need, because you're not going to do all of the labor work, all of the grunt work. For example, you analyze a company and you come up with a bunch of forecasts for line items. Then you hand it off to a financial modeler and they do it. I see financial modelers disappearing. I see in time that rather than me writing it down on a document and handing it to a financial modeler, I'll just write it down into a prompt. I'll learn how to prompt what I want. I'll write it into a prompt, and Gemini will integrate with Google Sheets and do it for me. And then I can export that in an Excel version if I need to get it into an Excel. But it'll just do it. It'll just do it for me. You can already extract historical data into a spreadsheet. That's not hard to do. So what would I need the financial modeler to do all of that labor stuff for if I can just do it? If I can have a prompt that is reusable, and all I have to do is give it the last 4 or 5 annual reports. Again, a prompt that's reusable. What do I need that for? Other than just what the financial modeler would come back to me for, saying when we go back 4 years or 5 years, the 5th year collapse these three line items into one. How do you want me to break this apart? The modeler would come back to you and ask that. So who cares if the AI can't do it? It'll come back to you and ask that. It's not saving you any time there. So I don't know that I can point to any one field that will disappear. Teaching, I think a lot of teaching will. I am looking at, what is available now and projecting out a couple of years at the current rate that it's moving, and trying to find a place for myself. And it's getting harder and harder. I know there'll be a place for me. I just don't know where it is. Even I don't know what parts of me will be obsolete. Will 50% of me be obsolete, but there'll be another 50% that I'm needed for? Or will 100% of me be obsolete and I'm no longer needed? I don't know the answer to that. But I do know that if I do not embrace this stuff and I keep doing what I'm doing, I'm out of business in a couple of years. Somebody somewhere with AI will produce far more content than I can, and I'll be looking at them thinking, how the hell are they getting it done at that speed? How are they doing this? Right? So I've already answered this question. Do you still believe we're heading towards a zero rate environment? Yes. Positions video said you hold sold puts on Apple. Just wanted to know how much analysis. None. I know you argued that you're in a deflationary backdrop, and you gave me this chart over here, and I said, well, all this chart has done is found two things that move in the same direction out of how many things? For everything that you find that moves in the same direction, I'll find you 5 or 6 other indicators that move in the opposite direction that say the other thing. That's the thing about a complex system, is you can always tell the story you want to tell. No matter what you want to do, there'll be data out there that supports your point of view, which is why I've always been critical of academic research in the social sciences, because you can say, look, my data set says my hypotheses are true. Yeah, this data set. But you could have found another data set that didn't have that relationship in there. Whatever hypotheses you have, there's a data set out there that will show that it's true. You can tell any story you want when it comes to social sciences, and economics is a social science. So I've always referred to academic research in the social sciences as creative writing, because that's all it is creative writing. I can start a paper right now with the wildest hypotheses, and I can find a data set that does have that in there, and I can support it rigorously. I can show all my steps. I can say, look at that. Look at that. Of course, I can't have all my hypotheses working out, because then that would look too doctored. I got to have some that don't work out. But really, academic research in the social sciences is creative writing. What you're showing me on the screen here is creative writing. Yeah, sure, it does that. But I could probably find, without much work, a whole bunch of relationships that don't show that say, no, this is wrong. It's going to be something else. Confused. If you really believe AI is deflationary, then why don't you want to exit from TLT? Well, TLT is an ETF, right? It is a managed ETF. It's not a bond. It's an ETF that targets a duration of around 16. And the average maturity of its bonds are about 25.5 years. So it does sell bonds and buys other bonds. Sells bonds and buys other bonds because it has to target a duration of 16. If it just held these bonds year after year, its sensitivity to interest rates would drop over time. Because no matter, let's say this is the future, there's par. No matter where it's priced, if TLT didn't do anything, it would be pulled to par over time. But it manages it, so it's very likely that it can stay on a certain trajectory, whereas the underlying bonds over time would be pulled to par. In other words, the underlying bonds have the very real possibility of outperforming the ETF that continually targets a duration of around 16. It has not performed. It has not performed precisely when it should have performed. And it's becoming, I think, more credible that the deficit will not improve under Trump, that it will actually get wider under Trump than it was under Biden, that the level of debt will actually be a larger increase in debt than under Biden, and that is unsustainable. From that point, fast forward 4 years, that is hard to come back from without massive austerity. So you either need incredible growth over the next 4 years to massively increase the tax base so that you don't run a deficit, so that you don't increase the debt. I don't see, from day to day, I see that as becoming less and less and less likely. So if I'm going to do anything, it would be exit TLT and get into the bonds. Because as each year goes by, these bonds become less sensitive to interest rate changes, and less sensitive and less sensitive. And over time, they do get pulled to par. So if I'm comfortable with, and the 20-year hit a 5% yield, if I'm comfortable with a 5% yield on that allocation, then moving to the bonds themselves as opposed to TLT guarantees me over that period of time that I'm going to earn that yield. And I will get it all over that period of time. I don't have to wait for TLT to perform. Now, if something happened where TLT suddenly skyrocketed, all these bonds would do the same thing too. All of them would do the same thing. So, yeah, I'm getting less interested in hanging out in something that just isn't moving. And the reason you'd be in TLT, because you get about 100 basis points less than if you were in the actual bonds. You get about 100 basis points less. You could do better by being in the bonds because there's no management fee and you get a higher yield. But you get options on this. However, the premium on these options is low. It's not even worth doing when you consider the dividend that you get monthly. When you look at the put premiums and the call premiums, it's like there's like nothing here. It's not even worth doing. So I may make the jump just to the bonds. I'm thinking of selling daily at the money puts. IWM 0 data expiration trades, take profit of 55, 100% of the premium. What might be overlooking at the money? That's 50%, which means 50% of the time you're going to lose. Right, 50% of the time you're going to lose. It's not a good strategy. You're playing a risky part of the distribution at 50%. You should find a part of the distribution that is not likely to happen, like 2 standard deviations, right? And don't get greedy. You're going to lose if you get greedy. Don't get greedy. Second, what's your strategy if it's put to you? It appears that you do not want them put to you, in which case don't sell at the money puts. In fact, I would say don't sell puts if you don't want them put to you, because you will be in a position where I'm either going to win or I'm going to lose. I want to be in a position of I'm going to win or I'm going to win. Either I win a lot or I win a little, but I'm going to win. I want them put to me. I'll sell at the money puts every single day because half the time they will be put to me, but I want them put to me. Right? So if they are put to me, I get them at a lower price. If they're not put to me, I get to keep all that money and do it again. I win both ways. What you've just described is you're either going to win or lose, and you're going to win about half the time and you're going to lose about half the time. You don't want the underlying, you're just gambling. This is just gambling. I would say don't do it. TLT spiral, is it imaginable that for you TLT could stay in the 5% range over the next 5 years? Is it imaginable? Yeah, I think that's imaginable. Or even get squeezed up to 6 or 7. It's hard to see 6 or 7 with the equity market continuing to go up. One of those two things have got to be wrong. You cannot have yields going up and markets going up all at the same time. One of those two things are going to be wrong. At some point, one of those two things are going to be wrong. So no, 6 or 7, you would have to be short beta at that point. Because if it gets 7%, why would I want to take on equity risk when I can get 7% in treasuries? Why would I want to take on equity risk? I get 7%. Thank you very much. I'll hang out here. It's huge competition for equities. I can't see how equities continue to perform in that situation. Investors lose confidence in the USD and their administration. Well, yeah. If they lose confidence in the USD, all US equities are priced in USD. What would your play be if TLT creep higher and higher? with the U.S. having to raise more and more debt. I'd probably go into the bonds, and I'd probably take money out of equities or short equities and use that to buy the bonds. I would do that because at higher and higher yields, it's more and more competition for return on equities, especially when you consider the sheer amount of money in pension funds. If they can get 7%, 6 and 7%, done. Why take on equity risk if you can get that, right? Found it very comfy and cozy to realize you had a good life. Oh, well, okay. Wish I could have, well, I mean, I had a good life. I've had a long life. I've had an interesting life. I don't know that I would say that every minute of the day was good. There were some dark periods in there. I'm in a good place now, but that doesn't mean I was on a good path all the way through. I was on a good path, then a bad path, then a good path, then a bad path, then a dark path, then a bad path, then a good path. I mean, no, it wasn't always good. It's good now. I do not know when or at what conditions I would deserve to feel or realize such a feeling. How does one know or realize he or she has got a good and satisfying life? Well, I don't know. I don't know that you are willing to say that at younger ages. I don't think that I was. But, throughout our lives, we're right here. We spend so much time looking forward, and we spend so much time, the older you get, you spend so much time looking back that there's very little space for the moment, of living in the moment, that you I don't think can come to the realization that you have it pretty good until you can live in the moment for a while. So take some time and just be in the moment, I guess, and reflect on what it is that you do have at that point in time. It depends on how you see life, really, but okay, that's just answering question. Interested to understand how you manage your short positions. Okay, I already did that. Mentioned before how those highly experienced in their career lack the time, not the ability to learn new tools. That's true. Have you continued to remain adaptable enough to choose the right tool for the job throughout your entire career? I will say, it's been a while now where I've said I'm tired of learning new things. I'm just tired of it. If I have to do something which requires me to learn a new skill first, I'm out. I'll just hire somebody who has that skill. So I thought, well, maybe in the applied series, let's put something for Python in there. And I just didn't want to learn a new skill. I looked at it and thought, I don't want to do it. Because I remember my computer science undergrad degree, and it can be frustrating at times, and it can just be, it's so detail oriented. And I thought, I don't want to do it. I'm tired of learning new things. I know what I know now. Let me cash in on what I know. I don't want to keep learning new stuff. Why not just hire people who know this stuff? Why should it be me? So no, there are some things where I just think, no, I don't need to know that stuff. But AI is one of those things where I say, no, if I don't know this stuff, I am sentencing myself to being obsolete in a couple of years. But if I know it, I can find a place for me still, and that place I find, I will be so much more productive than I am today. This has the very real potential to increase my output easy without trying by triple. To increase the output that I do by triple. But as I'm doing it, I think to myself, but why am I doing it and producing the output? Why do I not just show you how I use it to produce the output? Then you can produce the output and you don't need me. You see, I keep coming back to this, where do I sit? Unless I don't tell you how to do it, I feel that's kind of a crappy way to preserve my own usefulness, is to not tell you how I'm doing this. But if I show you how I'm doing all this stuff, then at some point you do it yourself. You no longer need me. That's the challenge I have right now, is what space belongs to me once you all start using this stuff? Is there still a space for me? And I don't know the answer to that. Anyways, there we are on the questions for the market outlook. I'm just going to leave it with the questions that are on the Discord for now because I am I oscillate between freezing and just sweating, and right now I'm just in a sweat. I don't know what I have, but a couple more pink pills, those Benadryl things, they just knock you out, and a couple more nights sleep, and maybe I'll get better. If not, then we'll figure that out. All right, ciao.